Mentioned earlier, Renaissance Capital estimate that the Westgate Kenyan attack will reduce current account tourism receipts by 0.6% of GDP and assumes no improvement of the 11% of GDP over the year. For more, we are joined on the line from London by Charlie Robertson. He is the Global Chief Economist at Renaissance Capital. Charlie, now looking at the Kenyan market, whereby you're saying the first thing that we want to discuss actually is the downgrade that you have on the GDP growth, whereby you're talking of 5% and previously you had it at 5.6%. Maybe you can give us an indication why you have actually downgraded the forecast that you had for Kenya.
Yeah, that's mainly because of the second quarter figures that came out yesterday were not as good as expected. We knew the first quarter numbers showed about 5.2%, and as a result of that, it wasn't just us. I think most of the market was looking for around 5.5 or 6% growth in Kenya this year. Then the second quarter figures came out, and instead of being an improvement on the already good first quarter figures, they showed a slowdown down to 4.3%. And what was missing was investment. The government had spent a lot of money on finishing the Thika Highway and so on ahead of the elections. After the elections, that slowed down. We thought the private sector would start lending money to start investing. They'd start to get help drive growth, and they didn't really do that in the second quarter. So it's mostly that second quarter number weaker than expected. So as a result, 5 is looking more realistic for the year now. I'm
glad you've mentioned on the quarter 2 performance, because there's something that you've mentioned that I'd like to take a cue from there, whereby the current account deficit actually worsened by 50% and it was standing at 95 billion shillings in quarter 2. For you, how do you see the second half faring?
Well, that's where we'd hoped to see some improvement. Tourism numbers were quite weak early this year. They were like 18% down in the first quarter and about 12% down over the first half. And I think that was election related. There's quite a lot of concern from, in the foreign media anyway, that the elections might prove violent, that we could see a rerun of 2007 and 8. It's not what Renaissance Capital believed. It's actually not what the financial markets believed. But it's what a lot of people were told. So tourism numbers fell a lot. We were hoping for that to get much better in the second half. And the sad economic consequence of Westgate is that that's not going to happen.
All right. Charlie, before we get to discuss the attack on Westgate and the impacts that you've mentioned here on tourism, whereby you're saying the numbers are likely to be 18% down this year. Now let's talk about inflation, looking also at the whole issue of the outlook that you have and the projection that you have on GDP, whereby we've seen inflation jumping significantly from a low of 4.3% in the first quarter. Now we have it at 8.29%. For you now looking at that in terms of what impact that is likely to have, give us an indication of what your thoughts are on that.
Well, it's mixed. At one level, you've got higher prices. For example, on VAT, that VAT hike that everyone's suffered from through September. People feel a little bit poorer. They might spend a little bit less. But looking 6 months ahead, if the central bank keeps interest rates where they are at around 8.5%, and inflation's around 8%, 8.5%, then actually it doesn't cost you much money to borrow. Maybe this is going to encourage companies to say this is quite a good time for us to be borrowing. It's quite cheap for us to borrow, and maybe that then helps the investment story in 2014.
Now let's delve into the Westgate attack. For you, what are some of the key concerns that you have? And of course, you're highlighting tourism as one of them.
Yeah, I did a lot of work on this a few years ago because sadly, it's something that so many emerging markets, or so many countries in the world have had to face. And you can then see who's successful at attracting tourism, countries like Indonesia or Turkey or Egypt, and see what the impact of terrorism has been. And what it tells you is that the terrorists never win in the long run. The tourists always do come back, and the trend, and it's been a very positive trend in Kenya for the last few years, that trend will return, but for 1 year, the numbers look much worse. And
you have it at 18% from the numbers from the report that you've done. You have it at 18%.
That's right.
And you're saying you're likely to go to 17%, but that is only up to next year.
Yeah, so we've got the fall of nearly 20% this year. I still think the numbers are going to be weak early next year. I think we could be seeing a fall of perhaps 20% year on year in the beginning of 2014. But over the whole of 2014, you should start to see a 7% growth. Then 2015, it'll look great. 2 million visitors perhaps coming to Nairobi, coming to Kenya, biggest numbers ever. and a big 25% growth.
All right. Charlie, many thanks for joining us as always, and thank you very much for that. That is Charlie Robinson. He's the Global Chief Economist at Renaissance Capital.